Hello, this is Peter, and it's gotten a little bit crazy out there lately to the point where you probably realize you need to make an independent income that has nothing to do with trotting off to a job. So, right now, I'm going to show you how to make some incredible money from home. In this presentation, you're going to see an incredible method to set yourself up for fat weekly paychecks. You can do this in the comfort and security of your own home or anywhere you want to be, because all you need is a laptop, a decent internet connection, and a few bucks to trade with. This is safer and makes better money than any other trading program out there for three simple reasons. Number one, once you put on your trades, you don't have to watch them. Now, this is more important than you might think, because about every trading strategy I've ever seen, you have to be Johnny on the spot with your mouse, getting in and getting out at the perfect time. And when you watch these presentations, somebody's trying to teach it to you, it all looks like it makes sense until you get in the real world and you find out how difficult perfectly timing the market is. Well, this is the opposite of that. We just put on our trades and pretty much forget about them. In fact, sometimes they work better if you don't watch them. So in terms of lifestyle, this is something that we can all do, even if you've never had any luck trading anything else in the past. And number two, you have a much greater chance of winning than any other strategy out there that has this much money-making potential. So as you'll see, the returns on this strategy are pretty darn high. And it's kind of amazing that they are, because it is a super effective, very easy to implement strategy. And number three, you get paid frequently and generously. So not only the returns are the returns good, but they come along pretty darn often. So we set our trades up to only be in them for about 9 days, but we overlap it. So we're putting on new trades every single week. And your paydays come on Friday, and you can set yourself up so that you have a payday every single Friday if you want to. And that might be a little bit more frequently than you're getting paid in your job. So this is truly the fastest and most effective way to make money from home or anywhere else you want to be. So let's get to the details. First, this is a strategy that uses options instead of stocks for two very good reasons. And if you've never traded options before, don't worry about it. There's a safe end of the options continuum, and there's a very risky end, and we're going to be on the safest end. This is a way to trade options where you just win the vast majority of the time. So why do we want to trade options? Well, options give you a lot more leverage than stocks. Options, allow a small amount of money to go a long way. You can do this really effectively with an account size of just $5,000. Actually, you can do it with an account size of even $2,000. But you can start with as little as $2,000, risking only $200 to $400 per trade. And two, the scariest thing about options trading for most people is their options have a high likelihood of expiring worthless because their time runs out. All options have an expiration date. And at the end of that option's life, at their expiration, there's no more time value left. It's zero. So huge amounts of money have been lost by greed-crazed options speculators because their options expired before they had a chance to make any money. But you have to ask, where did all that lost money go? Is it going to money heaven? Is it sprouting wings? Where does it go? Well, the good news is options are kind of a zero-sum game. If somebody lost it, that means somebody else made it. So who is that somebody? Well, the answer is the options sellers. The options sellers have an overwhelming probability of winning. So that's the side of the trade we want to be on. In this wonderful world we live in, we get to choose. Do we want to be an options speculator? What's interesting is most people do. Most people want a chance to win the lottery. But who's really making the money with the lottery? It's the ticket sellers. And that's who we want to be. We want to be the lottery ticket sellers, and that's exactly what you become when you start selling options. So the cool thing about it is there's never a shortage of speculators lining up around the block to hand you their money. So let's just take a look at how this works. And I'm going to just get out my little red pen here so we can spot what's going on here. So a lot of the time stocks are trending. And, they just kind of tend to go in a pattern. Now, this one happens to be going up. Sometimes, in bear market kind of situations, most stocks are going down. So this just happens to be an example where it's going up. And you can spot this trend. You don't have to be some super fancy technical chartist, with years of technical training to spot a stock that's going up. So here's what's cool. Old Sir Isaac Newton said it best when he said an object in motion tends to stay in motion. And that is sure true when it comes to stocks. So all you got to do is spot a stock that's heading in a certain direction. That can be up or down or even sideways. So once you spot that direction, you simply sell an option in the opposite direction the stock is going. So this stock, you can see that it has an uptrend support line where it just doesn't tend to go below this line and it just keeps going up. And it's as simple as selling a put. And when you sell an option, if this stock was going down, we'd sell a call, up above it, but it's going up. So we sell a put below it. And the object is to sell a put or sell an option that never gets touched by the stock. So it's kind of like a game of tag, right? So we want to sell it as close as possible to the stock because the closer we sell it, the more money we make. But we want to sell it at a point where the stock never touches it. So that's the game we're playing. And if you can just spot which direction a stock is going, which isn't that difficult, you can probably have some pretty good success at this. Oh, one other thing I want to point out is options always have an expiration. They have a finish line. So unlike a stock where you just buy it and you hope something nice is going to happen, and that could take years, the cool thing about an option is it expires. And if we're selling time instead of buying time, we're on the right side of that equation because time goes by pretty quickly and you don't have to do anything about it. So if you're selling a fairly short amount of time, that option is heading for expiration. So you collect pretty big money right here. You collect pretty big dollars. And by expiration, that's turned into zero. So all that money takes up permanent residence in your account. Pretty dang cool, especially when it's happening every week. So one of the things that makes this strategy so effective is all the different things a stock can do and your opportunity to make money on them. So let's just take a look at this. So say right here at this point in time right here is where we sold this put, and say it's just right about in here somewhere, right here, if you line these up time-wise. So at this point right here, we don't know what the stock's going to do. Stocks do crazy things. News comes out, the market changes direction. Nobody knows. So here's some of the things this stock could do. Some news could come out and this stock could just shoot to the moon. It could just go straight up. Who knows? Some big announcement, who knows? Or the stock could go up gradually, kind of like the way it's doing right now. It could just keep doing that. That's probably the most likely scenario. Back to that object in motion tends to stay in motion. Or the stock could just lose all of its momentum and just pretty much trade sideways. Or something could happen and the stock could kind of break its trend and it could go down. It could go down kind of gradually. Or the stock, some really bad news could come out and this stock could completely fall out of bed. Well, remember when I said the object of selling this put is to make sure that the stock never touches it? Well, here's how this works. In this scenario, we make money if the stock goes straight up. If the stock goes up a little bit, we make money. If the stock goes sideways, we make money. If the stock even goes against us, even goes down a little bit, but it doesn't go down super radically, we make money. There's only one scenario out of these possible 5 scenarios where we lose money, and that is if the stock goes straight down. And what is the likelihood of that happening if the stock already has this huge trend of rising? And that's particularly true when the overall market is going in the same direction as the stock. So that's one of the secrets where you can really keep momentum on your side. They say about 75% of stocks go in the same direction as the market. And boy, I would say it's at least that many. So having that market direction wind at your back is really, really important. So we'll naturally win over 80% of the time. And it's not just the winning 1 out of 5 is the 80%, but I can actually show you with the Black-Scholes options pricing model where you can actually dial in your exact percentage of winning. You can get really precise with this. And that's another cool thing about options is they're based on a mathematical formula that actually won the Nobel Prize in 1997 for the mathematicians that invented this formula back in 1973. So we can really dial in our probability of winning, which is really great. And that's what makes one of the things that makes this strategy work so well for 99% of the people out there. But here's the question you always have to ask, no matter how good this looks. But what happens when the stock goes against us? That's the number one question you should be always asking, no matter how good a strategy is. How much risk do we have? So let's take a look at that. Let's look the boogeyman in the eye and see what our worst case scenario is. So we need a hedge to reduce our risk. So let's just go back a little bit and take a look at this. If we just sold this put, that's all we did. That's called selling a naked put. And the reason it's naked is it has no kind of hedge. We don't have any kind of hedge, no protection. And believe me, you don't want to go naked down Wall Street. Most of us don't look that good naked over the age of 30 anyway. So let's just put that whole idea aside and figure out how we're going to protect ourselves. So why do you need protection? Well, when you sell a put, whenever you sell an option, you are creating an obligation. So in this case, you are creating the obligation to sell the stock for this price, whatever it happens to be. It looks like $317.50 in this case. So when you have that obligation, if this put is just naked, if it has no protection, you've got liability all the way down to zero. Now, if you were to sell a call spread, if we were doing the opposite, if this stock was going down and we sold a call spread, at this point, when you sell a call spread, you're taking on the obligation of being able to have the stock called away from you. And if you don't own it, you have to go out and buy it on the open market. You're really creating an obligation where you have liability all the way up to infinity. So when you start thinking about that risk, and that's liability all the way down to zero and all the way up to infinity, it's just way too much risk. I know there's people out there that advocate selling naked options. I would never do that. I think it's crazy. I've seen people lose everything they have doing that. So we need protection in the markets. The markets are crazy. They're random. They're hard to predict. And so we need protection. So what we're going to do is when we sell this put right here, we are simultaneously going to buy a put. What that does is it gives you protection from this point all the way down to zero. And if you did a call spread up here, if you did the exact same thing, you would have protection from this point all the way to infinity. So right here, the only part of your risk is between these two strikes. So in this particular case, well, this now is the 315, it looks like, and this looks like the 310. So that's $5 worth of risk. It's only the distance between the two strikes. But here's the thing. This option right here, the one that's closest to the underline, has more value than the one below it. And in this case, it's $1 more value. So on a $5 spread, in this case, we're creating a $1 credit in our account. Now, here's the really, really cool thing about this strategy. One of the things I love, or there's a couple things. Number one is you get this money instantly. It hits your account instantly. Now, number two, in most cases with trading, you're sort of wondering, am I going to get to keep this money? It depends on which way the stock goes. It depends on how the trade turns out. But with this deal, with selling credit spreads, that $1 is what you're getting paid to take on this risk, and you never have to give that dollar up. Now, if it costs you more money to close the spread, yeah, you could potentially lose on this trade, but you never have to give that dollar up. What that means is that dollar is yours to keep forever. What that means is if there's $5 risk right here and you subtract $1, if you subtract this dollar that you took in that you never have to give up, now your risk only equals $4. That's it. So you're risking $4 to make $1. And, that's not too bad. So we can make $1 while risking 4. So that right there, if you look at it, is a 25% return. Now, we're only talking about 9 days at a time. If you make 25% every 9 days, you don't have to have a calculator to know that you're going to be a zillionaire. Of course, the real world doesn't work out that way, and I'm going to show you what's a little bit more realistic in a minute. But this is actually what we're shooting for. We're shooting for 25% returns in a very short amount of time. But here's my question. So say you're a little skeptical and you're a little worried about, everything that has to do with trading, and you're going, yeah, it looks good so far, but I don't like the idea of possibly losing $4 to make $1. So is that still too much risk? Is there some way that we can actually reduce this risk? Well, there is. There is. And here's what it is. Now, what's cool is that I recommend that everybody trades options with Thinkorswim. And I think they have the best trading platform out there for a whole bunch of good reasons. I mean, I could talk about them for about 45 minutes. Now, there's other options brokerages out there. I've opened accounts with just about all of them and traded with them. Still like Thinkorswim the best. I think they have the most sophisticated software, and they've reduced their commissions down to it's practically nothing. So one of the really cool things about this software at Thinkorswim is they allow you to enter all these automatic orders. Why is that important to us? Because we really want this to be a lifestyle strategy. We don't want to make our money by having to sit around and hover over our computer all the time and worry that, oh my gosh, I have to go to the bathroom and I'll be in there for 5 minutes, and when I come out, is my whole account going to be gone? Like these futures traders and Forex traders where it's just risk coming out of your ears. It's just crazy. I don't want that lifestyle. I wouldn't wish it on my worst enemy. I mean, I think I know for myself, I'd do that for a little while. They'd haul me away in a gurney, mumbling to myself. So how can we set up automatic orders so that we don't have to worry about that? Well, here's what we do. We enter an automatic order where if this stock suddenly went down, started threatening our strike, we would close this spread when the stock touched our sold option. The minute it's touched, we are going to close this position. Now, remember that I said that we have risk, a $5 worth of risk in here, minus our $1 credit. Well, here's what's interesting. And here's what's really, really cool. Well, first of all, let's just take a look at what this stop looks like. So here it is. We set our stop right here. So we have a hedge now, and we have a stop. So how much can we lose? So instead of the $5, this entire distance right here, options theory tells us, now we'd lose the whole $5 if the stock went through our stop. Went through both of our strikes and kept on going. And at expiration, the stock was down here somewhere, down below both of our strikes. If that was to happen, we would lose the entire $5. But here's what's cool. If we set up a stop right here and we close the spread automatically, you don't have to watch this. You can be taking a nap. You can be at work. You can be traveling across the country. You can be eating a bag of chips on the couch. Whatever, it just automatically closes. And one of the beautiful things about that is from an emotional standpoint, you don't have to sit around and wring your hands, with, sweat coming down your brow going, oh my gosh, should I close? Should I hope that it's going to bounce back? Nope, just automatically closes for you. And options theory tells us that if this is the point at the sold strike where the spread is closed, instead of costing $5 to close this spread, it actually costs half of that. So it only costs us, instead of $5, it costs us $2.50. Now, that's half. That's half right off the bat, but it's even better. And here's why. Remember that dollar we collected? Well, $1 is a bigger percentage of $2.50 than it is of $5. So this dollar credit that we collected has an even bigger impact. So now instead of losing $4, the maximum you can lose on this deal is $1.50. Now, for you folks out there that have traded this, you go, oh, you could have a gap down, all this kind of crazy stuff. Yeah, that's true. But I'll tell you what, if you're in that kind of a market and you think the stock's going to, could gap on you, here's two things that you can do. You can either close the trade immediately, because you have the privilege of being able to close this trade any way you want. So anytime you want. So if it's going up right here and you see this big red down bar right here and you get really scared, just close the darn thing. You're done, you're out. Another thing that you can do is you can set your stop higher. Like say you draw a line right here and you say, you know what, I think this looks like new support right here. I think if this line right here is broken, I need to do something. Set your stop so that any point in here, if support is broken, you close your spread. So there's a million ways to safeguard this, and I'm going to teach them all to you. There's so many deck stackers, ways that you can really stack this in your favor. But here's what I really want you to pay attention to right here. Look at how you've reduced your risk. Now you have over an 80% chance of making $1, and the most you can lose is $1.50. Now things are starting to look super, super attractive. So here's the breakdown. Here's with no stop, we could possibly lose $4. And here's, oh, we better connect this line here for you folks that like to see connected lines. And here's with a stop, our loss only equals $1.50. And I love this better way. This is a better way. And you might think that this is obvious, but you'd be surprised how many people trade these spreads and never, ever put on a stop. And they just lose their pants. And I mean, look, putting on a stop, I've got videos that show you how to do that so that there's no guesswork involved. And putting on a stop literally takes me 10 seconds. So you wait till you get filled, and then I just immediately enter a stop on every single trade. And I teach you how to do the same. So we always shoot for an 80% chance of winning or better. So all other things being equal, you win. I mean, you just win the vast majority of the time. But here's what's cool. If you don't, now we know how to take care of that. Now you have a strategy for taking care of that. So let's get real here. So that's great in theory. This is no question the best way to make money and make money quickly. If you're at home, you're sitting there worried about your job, you're worried about your income, you need an independent income, you want to create some really good returns really fast, but you don't want a lot of big risk to go with it because you can't afford to lose. There's never been a better money-making machine out there. And you know what's really cool? I think the coolest thing about this is that everybody isn't doing it. In fact, if you look at most options traders and you look at most educational services out there, like if you Google options trading, 9 services out of 10 are trying to get you to buy options. Why? Because once in a while, they can brag about a 200% gain or a 300% gain. But what they will never tell you about is the dozens and dozens and dozens of losses, 100% losses when the stock reversed against them and that options expired. They'll never tell you that. But I'll tell you, and so people get real excited about these big home runs. But I've traded options now since the mid 90s. I've been doing this forever. I'm in the options market every single day for one really important reason. I finally figured out how to make money. And more importantly to you, I figured out how to teach other people how to make money. And the people that come with me and come on board with me and get my education and subscribe to my service, they stick with me for years and years and years. And why not? The amount of money that we charge per month is nothing compared to what you can make. I make people 10 times on their money than what they're paying me most months. So people stick around, and I love them, and I get emails from them, and like we're one big happy family, and it's amazing what a good mood everybody's in when you're making money. So let's take a look at some trades. These are recent. So everybody says this selling options is a low volatility strategy. I would disagree. So in this time period here, and this is a February, March, going into April 2020, big coronavirus crash, the market's gone down, the volatility index, the VIX has just gone through the roof. Everybody's scared to death. You can still make money. So in this particular case, I was looking at Costco, and of course, all these articles come out about how everybody's, buying out all the toilet paper and everything else in Costco. And I talked to some of the Costco employees, and they go, oh my gosh, we're $1 million up on the month already. And that was like in the first week of March. I mean, Costco was doing so well. And I just took a quick glance at their stock price, and look, so the stock went, just crashed right down, right to the July 2019 support level. So that's a really good support level. And then it started to bounce, and it bounced really big, and then it came back down, but it didn't come back down all the way. And you started having these higher lows. And I thought, man, with all this volatility, one of the cool things about volatility in markets like this is it really juices the options premiums. And what that means is we get bigger paydays. We take in more money than we normally do. So in this case, we sold below support. So we sold the 265 right here, which is below, support's at 270. Sold the 265. And you can see right down here below it, we bought the 260. And that's a $2, oh no, actually that's a $5 spread. No, I don't know what this was. We have it recorded. I probably drew this wrong, but we had it recorded as a 250 spread. Now, normally we would want to collect 50 cents on a 250 spread. That's our 25% return. But because there was so much volatility, look at this. Look at this range. It's just absolutely crazy. The volatility, the options premiums were super, super spiked. So we got 60 cents, which is even better. So this turned into a 9-day 32% profit. And what happens is you don't even have to worry about selling this thing. So here's your expiration right here. And the stock just kept bobbling along, went right through expiration, never ever got close to our sold strikes. And we just ended up keeping all the money. And that's usually what happens. It's the best hands-off strategy I've ever seen. So here's the real crash here. This is in the S&P 500, right? And everybody's just freaking out, and everybody's all worried, and all the brokers and all the stock gurus out there talking about all the pain. Well, we didn't have a lot of pain because we just casually, quietly, easily, calmly sold a call spread up here. And that's when the SPX was right here. But look what it did. It just fell right away from our call spread. And we ended up collecting $1.20 on a $5 spread. So once again, that turned into a 32% winner for just 9 days of time. And I'm not cherry picking. I mean, we just didn't have any losses during this period. I mean, I'd love to show you some losses, but we've just been doing really good. So here's another couple of trades. So this is Expedia. They're a big online travel booking company that, maybe you've used before. I really like booking my tickets on Expedia. It's cool. But when this whole thing happened and the whole scare in the market, I mean, the travel companies just got hit harder than anybody. So here's pretty well-defined. This is called an island reversal right here, super, super bearish. And it's an island because it's not connected to any of the rest of these. This was resistance. This line, this horizontal line was resistance for a long time. It kept bouncing against it. Well, then when it went above it, it should be support. So when this dropped below it, all we had to do is sell our call spread above it. We had a super high probability of a profitable expiration. That's what happened. As you can see, here's our finish line. The stock went right through that finish line. We just kept all the money. And it worked out so well, and Expedia was still trending lower. We just sold another call spread right here. So on our first call spread, we made 27%. And because the volatility was so high, on the second call spread, we made 35%. This is in a really short period of time. Now, these, I got to tell you that these returns are higher than we normally get. And that's just because of a crazy market. So in a crazy market, it works really well. You just have to be on the right side of the trade. And that's not too hard when things are trending this strongly. So those are great returns for just 9 days of time. And if you get those kind of returns several times per month, you're gonna do very, very well. You'll never ever hear about stock traders making those kinds of returns consistently in that short of amount of time. And yet, I would argue that this has less risk than stocks do. And the best part is it's so easy. It takes about 2 minutes to place your trades, and then you walk away knowing you'll automatically win the vast majority of the time. I think the best thing for me, and I think for a lot of people, is this is sort of a worry-free strategy. But that doesn't mean it doesn't have super, super high returns. I mean, most people, when they talk about worry-free or sleeping really well at night, you have to be satisfied with some super low return, like in a bond fund or something. I mean, this is the opposite of that. This really produces some cash. So what's realistic? What can we expect to make? I told you a minute ago, those are really good returns. So we usually don't get 32, 35% returns. What we shoot for is 20 to 25% returns per trade. Sometimes we get more, sometimes we get less. But the odds tell us we're going to lose about 20% of the time. We're going to win about 80% of the time. So we're going to have to factor in some losses. This is the real world. And losses happen, and they just come with the territory. They're no big deal. But something else I want to point out is we don't trade our whole account. The reason is we want to keep about 40% in cash for buybacks and rollouts, which are strategies to make a bad trade better. And they're really, really important. And they can turn a losing trade into a winning trade. And, I show you all that in my education material. It's super cool. So considering all that, losses, not trading your whole account, closing trades early to avoid risk, what can you expect to make? And this is the big question that, we should all be asking, even with losses. So I think you can do better than this, but I want to cut it down to something that is so realistic. I think anybody can get this rate of return. And I mean, even a ranked beginner. All they got to do is just follow the directions that I really clearly spell out. And I think you can get this return. 5%. So we're talking about per time period. So we're in these trades for only 9 days. And I'm just going to round that out to 2 weeks. Let's just say you're just turning your money, twice a month. So, just to make this even less attractive than it is, instead of 9 days, let's say it's every 14 days, and you're getting 5% every 2 weeks on your money. And so here's the question. Now this already figures in losses. I mean, keep in mind we're shooting for 20 to 25% every 9 days, and we're getting it. We're getting it most of the time. But if we cut it way down to 5%, here's the question. What could that turn into in 24 months, starting with just $5,000? Now, a lot of people can come up with $5,000. A lot of people already have that in, an IRA. And I'll show you how to trade this in an IRA and how to get approvals for that. So let's just take $5. It's not huge. It's not $50,000. It's not $100,000. A lot of people can come up with $5,000. You might be one of them. So if you're just trading that and you're getting 5% every 2 weeks in 24 months, which is pretty darn quick, this is what your account looks like. Now, here's what I want you to notice. This is a pretty good rate of return up to this point, up to the end of year one. But because of something called compounding returns, this curve, this rate of increase starts to go exponential. And compounding returns are not super complicated. That's just making money on your money. So instead of constantly rating your account and pulling money out of it, you make profits on your profits. And you can do a hybrid. If you need some money right now, pull a little bit of your profits out of your account, live on it, pay some bills, leave some profits in there to trade with, and just keep doing this. So starting with a $5,000 account, this is what your increase looks like if you just get 5% return every 2 weeks for 2 years. A modest $5,000 account turns into $63,214.04, and you're collecting $6,479 per month. And it just keeps growing from there. Why aren't you doing this? This is about all I do. Once in a while, I take a flyer on a trade, to shoot for the fences or whatever. 90% of the time, this is all I do. And I've been trading options since the mid-90s. So keep in mind, you don't have to wait 2 years. If you need money right now, that's great because you can start collecting money immediately. You can start collecting money this week if you want to. And this is the best kept secret in the world of finance. Nobody's telling you about this for one simple reason. Brokers, financial managers, financial advisors, they don't make any money by telling you about this strategy. And I make very little. My goal is to make it over from a lot of people. If a lot of people give me a little bit of money, I can produce education, produce fantastic trades every week. We can all prosper. So here's the thing. If you're skeptical and you're looking at that chart and you go, hey, Peter, nothing works out that way in the real world. And you're exactly right. We have some weeks, most weeks are way better than 5%. Some weeks we actually lose money. There's a time where, if things get crazy and you might have a losing week. But most of the time we make really, really good money. So my question to you is, what if that chart is even close? What if it's even close? Is this still worth doing? Now, even though this looks really good, in the real world, there's a problem, and it's a pretty big one. Now, you can try this strategy out for yourself, starting with as little as $5,000. But here's the biggest problem. You can go out and do this on your own based on what you've just what I've just shown you, and you can probably do okay. But what if you miss a few things? You don't click on the right mouse, you don't buy the right hedge or sell the right hedge or whatever, And if you don't do well right off the bat, you might disregard the whole strategy and quit. And I know that's the way it is for most of us. If you try something new and you get burned right off the bat, man, you're just going, whoa, 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 I'm out of here. And that would be a shame, because this really is the best way to trade, because of your very high likelihood of winning, the hands-free nature of the trading, and the tremendous compounded returns over time. So to make sure you start off profitably and stay that way, I put together an educational package that is the best anywhere for this strategy. I've been perfecting this package for over 10 years, and I keep adding new, really great stuff to it. And it's at a fraction of the $2,500 sales price we used to charge. I used to sell this at live events all over the world. I've traveled all over the place. I've sold this exact package, this strategy, on a cruise ship in the Mediterranean. It was so unbelievably, and you know what's amazing is, even though people paid $2,500 back then, I still get emails, and I still get gratitude from people that are still cash flowing the markets this way. You can do this because it's a couple of clicks of the mouse and you walk away. You can do this at any age. You can do this at age 90. It's really, really cool. But what's even cooler is I don't charge anywhere near $2,500 now, because I want everybody possible to have their hands on this. I reduced this price to a point where I know anybody that's serious can afford it. So this whole package is called The Winning Secret to More Income More Often, and there's some really good reasons why we call it that, obviously. But here's what you get. Right off the bat, you get how to trade credit spreads for fun and profit. It shows you step by step how credit spreads work, why they work so well, and how they can work for you. You also get a 161-page downloadable ebook, complete with color graphs, charts, pictures, and everything you need to start trading profitably and stay that way. Plus, I just completed a 10-chapter video series where you can hear and see exactly what to do to start generating income. Look, I don't believe in boring people. I don't like to be bored. I'm just amazed at how people can talk about making money and make it boring. It's like how, somebody can talk about sex education and make sex really, really boring. It's just like those are two kind of exciting subjects, and you just want them to be exciting. These videos are short, to the point. They're really clear. They show you exactly what's going on, and I think you're going to love them. You also gain access to our archive webinars and video tutorials, so you can discover new strategies and ways to improve your returns and limit your risk. And you'll also have access to all new webinars for life as an owner of this package. Plus, you'll get videos that show you how to set up automatic orders. And we've talked a little bit about this, and there's more than just setting a stop. I mean, there's so many cool things you can do on the Thinkorswim program, software platform. You can set up if-then orders. If this happens, then I want that to happen. I mean, it's just wonderful. It really frees us up. And this is what I'm really proud of. So this is our subscription, and you get 2 new high probability trades every week. And I come out with this really late on Tuesday evening, so you'll have it Wednesday morning in order to read the whole thing and place your trades really clear. Tell you which ways the market's going, how it affects us. I provide 2 trades. I provide a conservative trade you can do in your Roth IRA if you want to, and then I provide a more aggressive trade. And then I give you a follow-up on all of our existing trades. So you're never in the dark, never, wondering what to do. And if there's something that comes out in the middle of the week that, we need to take some action on, I not only email you on that, but I'll also send you a text. If you want to give me your smartphone number, I'll just send you a text and tell you exactly what to do. Most of the time, we don't have to worry about it because this is a pretty hands-free strategy, but it's nice to know you get that kind of attention. And the education part of the package is a one-time fee. You have access for life. No matter how many things we add or improvements we make, you'll always have access for a one-time ticket. This is updated, weekly, and so there is a monthly fee for this. It's not a lot, what you can make on just one trade, and that's ongoing. You can also buy a year if you want to get a reduced price. But keep in mind, we do 2 trades a week, so you get 8 trades per month. And just one trade, depending on the number of contracts, can pay for your entire subscription for the year. And you get 8 trades per month. And that's why people tend to stick with me for a long time, is we tend to win, and we win a lot. And the subscription just isn't much money compared to that. So I really encourage you to come on, because it's a lot more fun to make money together than apart. So as an extra bonus, you get a 10-module video course specifically on trading the weeklies. Weeklies are the best thing that ever happened to options. You get these really quick expirations. All the good things about options are just amplified by having weekly expirations. And then this is something that nobody else does. So we know that the best way to learn is through one-on-one instruction. And when you get a brand new educational package and you get a brand new subscription, a lot of the time you're really excited when you first get it. Then you kind of get bogged down and you don't know what to click on. You don't know what to watch. You don't know, what to do exactly. So I've got this wonderful gal, and she's going to go over with you one-on-one exactly how to get the most out of your package. And this isn't like we don't send you an email and expect you to figure out. I mean, we give you individualized attention. Just you and the best gal I know to really deliver this information. She's been with me a long time, and she knows this backwards and forwards, and she's really going to help you out. And plus, she's a big sweetie. I think you're going to like her. And now here's a bonus that is kind of amazing. Our next bonus. So take a look at this. This is Alicia. And I'm lucky enough to live in a small town with a really good university in it. And she graduated at the top of her class in finance. And I interviewed her, really liked her. She is as sharp as a tack. She's super, super smart. We kind of look over different option strategies together. Sometimes we invent new option strategies. She's the person I bounce a lot off of. She's really good at making money in the market. She's also really good at the Thinkorswim platform. She can really show you a lot of things. And she's our head coach, our head mentor. People buy 3-session coaching packages with her, 8-session sometimes people buy 8-session coaching packages back to back. I think one lady bought 5 or 6. She just, at the end of every one, she just, bought another one. Was it because the gal was a slow learner? No. It's because Alicia's really good at making money in the markets, and she can show you things to do that will make you a fortune. And that's in spite of what she charges. So she is $400 for 45 minutes and worth every penny of it. And you're going to see why, because I'm going to include your first session in this package. And the whole point of being with her is to make money. So I want you to take advantage of this, take advantage of what she's going to show you, and you are going to be blown away. Now, am I doing this to be a nice guy? Well, of course, I want you to buy more coaching sessions, and I think you will once you have a chance to talk to her. Once again, she's super, super cool. She's really personable, and she's really sharp, especially when it comes to making money in the options market. So this is their first session is included. And I'm really excited about that. And I'd actually like to get your feedback on that because I think she's fantastic. So I want you to come on board so we can trade this plan together. Invest what you can and prove to yourself how well this works. And before you know it, you'll be dancing in front of your laptop. So to get everything we've talked about and to start generous cash flow from anywhere, click on dancingprofits.com. And I'll look forward to seeing you inside the site.